Everybody, tomorrow we got two key events happening, right? This is a policy plus macro double event risk window. And either outcome can move risk fast, and both together increase whipsaw probability. So we're going to go ahead and break this down, all right? Event one, we have the Supreme Court tariff ruling at 10 a.m. Eastern tomorrow. The market is currently pricing in 77% probability tariffs that are going to be ruled illegal. This matters less for trade mechanics and more for sentiment and regime pricing. Now, scenario A, tariffs get ruled illegal. This is the consensus outcome. The immediate reaction, risk assets will likely sell first. Crypto especially is going to be vulnerable here. Think high beta sentiment unwind. Industrials, energy, and materials come in weak, and bonds are going to catch a bid. That's growth uncertainty. Now, this is bearish initially, markets currently treat tariffs as supportive / inflation buffering. Removing them forces markets to reprice downside risk, and even if replacement tools exist, they're slower and weaker. Now, the key risk, this triggers a quote-unquote policy uncertainty discount, not a relief. The bias here would be SPY and QQQ short-term bearish. ES is the volatility expansion is likely, and Bitcoin and ETH a downside skew. Scenario B, tariffs upheld. This is the contrarian outcome. Immediate reaction is a relief rally, what everybody wants. Cyclicals will catch a bid, energy plus industrials outperform, and the bonds sell off. Now, why? This removes a major overhang. It confirms the status quo, and it reinforces inflation managed via trade policy narrative. Now, bias here is SPY QQQ, short-term bullish, and the ES trend will continue, with crypto having a relief bounce, but it being also very fragile. Now, the next thing we have is U.S. unemployment data, which will hit at 8:30 a.m. EST tomorrow. Maybe I'll get on for that. Who knows? Consensus 4.5% versus 4.6% prior. So it's trying to come back down. This report will lock in the macro narratives for rates. So here's scenario A. Unemployment comes in higher, above 4.6%. The market reaction here, equities will sell off, small caps are going to get hit the hardest, the bonds are going to rally, and the rate cut odds rise. Now, why? This confirms recession risk. This also is earnings expectations coming under pressure and markets shift from a soft landing to downside protection. The key point here, rate cut hopes won't save equities immediately. Growth fear dominates first. The bias here would be SPY and QQQ are bearish, with IWM being very bearish and crypto being weak. Now, our next scenario are unemployment comes in lower. The market reaction, and that would be 4.5% or lower. Now, the market reaction on this would basically be equities popping briefly, bonds selling off, and rate cut hopes get crushed. January cut will basically be dead at this point. I think it's still at about 80% for that. So be on the lookout. Now, why would this happen? Well, strong labor equals the Fed stays tight longer. Liquidity expectations get worse and valuations get challenged. The key risk here is this is a bull trap setup if markets fade the move. The bias will be initial green, potential afternoon fade, growth stocks become vulnerable, and crypto struggles after initial bounce. Now, here's the combined scenario matrix, the real risk, okay? So worst case for risk assets, tariffs are ruled illegal plus unemployment comes in higher. The hard risk off, SPY breakdown risk, crypto flush, and bond surge. This is your volatility spike scenario. Then we have the most confusing / whipsaw scenario, tariffs ruled illegal and unemployment comes in lower. The first move down will be tariffs. The second move up will be jobs, and it will just end up being in a chop range for the day, most likely, like what our jobs report did today. Option sellers are going to get punished here. All right. Now, this is what to expect tomorrow. Volatility expansion and not any real clean trends. The first move may be the wrong move, like earnings. Wait for that confirmation. Watch ES acceptance and rejection at VWAP, bond yield reactions, not just SPY, and crypto for sentiment confirmation. Bottom line, the market is boxed in right now. Weak data equals a recession fear. Strong data equals tighter policy for longer. There is no clean bullish macro path, only relative positioning trades. That's all I got for you in this episode. I'm over on Free Wi-Fi Radio right now, streaming charts with Denali Trades. Feel free to come over and hang out if you want. We will be doing a flow scanner recap show at 4:15 p.m. Eastern today, so be on the lookout for that as well. And we will be doing our macro show tomorrow as well. So I hope y'all are having a great trading day today. Like, subscribe, comment your hottest take below. Are you bullish? Are you bearish going in tomorrow? Let me know your thoughts.